Bitcoin is something that everyone knows about in some capacity. For some, it's something they've been invested in for some time and are trying to ride the tide until they can cash out big for it. For others, it's something that they're not sure about given its rises and falls over the last several years. And for many out there, they just don't know if it's something to put money into when crypto just seems like a risk. But for those who try and see the big picture, they truly believe that not only will Bitcoin continue to rise, it'll continue to levels unheard of before. Allow us to show you how Bitcoin will rocket over $200,000. The predictions. A combination of supply and demand dynamics and the actions of legacy financial systems will push Bitcoin to $200,000 in 2021. Bitcoin has been on a tear in 2021, and if history is any indication, we should expect Bitcoin to continue to run well past the six figures mark and to $200,000 and beyond in 2021. While the typical skeptic will shout from the rooftops, Bitcoin is nothing more than a speculative bubble, and how there is no intrinsic value, Bitcoin is just tulips. These critics clearly have not done much critical thinking or research on the topic. To be fair to the naysayers, on the surface it's hard to understand how anything that has appreciated 711% over the span of 365 days can have done so without being the beneficiary of mindless speculation, or a bubble that is due to burst at any moment. But the answer is simple. Supply is programmatic. The Bitcoin protocol has programmatic supply issuance. Thus, price is a function of increasing or diminishing demand to hold the asset. There is no variability on the supply side. This is a monumental breakthrough in monetary economics, and is a concept that is ill understood even by so-called economic experts. Every 210,000 blocks, or about every 4 years, the Bitcoin protocol undergoes what is called a halving, where the new supply of Bitcoin issued into circulation is reduced by 50%. This event creates a disequilibrium in the supply and demand dynamics that the market had adjusted to during the previous 210,000 blocks. Patterns. While halving events are known about into the future, it is quite literally impossible to price in a supply shock in regards to a monetary asset. In March 2019, Plan B, a pseudonymous Twitter user, released a model that quantified the relationship between the relative scarcity of Bitcoin and the price. Interestingly enough, he found there was quite a significant correlation between the stock-to-flow ratio of Bitcoin and the price action of the asset. Plan B later revised the model to account for presumably lost coins. While it cannot be said that the price action is directly attributable to the halving and the stock-to-flow relationship, it is extremely obvious that this is simply not a statistical anomaly or occurring simply by chance. The model predicts a rise to $100,000 plus in 2021, and in my opinion, that is just the start. As seen in the previous halving cycles, with the halving serving as a catalyst, the price run-up in Bitcoin brings about a wave of new adopters and users who come to understand the monetary attributes of Bitcoin. This works in a reflexive cycle. New adopters enter the space competing to acquire Bitcoin, which increases unit price, which increases media attention and miner profitability, which increases network security and gives the asset more perceived legitimacy. This process has been occurring in a reflexive and cyclical fashion for over 12 years, and would be a bad choice to bet on it stopping anytime soon, especially given where it might just be headed. The catalyst. What is fundamentally different during this halving cycle is the monetary debasement that is occurring in the legacy financial system. Major global central banks, mainly the Federal Reserve and European Central Bank, ECB, have painted themselves into a corner. Following decades of interest rate reductions to stimulate markets, rates are stuck at the zero lower bound, leaving them without a major tool in their toolbox. The response? Quantitative easing on a scale that was previously unfathomable. shown by a parabolic rise in the balance sheets of the central banks. Without the ability to lower interest rates any further, quantitative easing, the act of buying bonds and securitized debt with newly printed cash, has been the go-to response. This has provided a boom to global credit and stock markets and has served as absolute rocket fuel for the price of Bitcoin. Recent statements from both the Fed and ECB have shown that they are committed to continue easing. What the rest of 2021 could bring. In the late months of 2020 and the first months of 2021, corporate and institutional interest in Bitcoin as a monetary asset has exploded. The insurance industry, corporate treasurers, Wall Street banks, and sovereign wealth funds are all gearing up to enter the space in a big way. The bad news? A vast majority of the 18.6 million Bitcoin in circulation are not up for sale. The good news? A vast majority of the 18.6 million Bitcoin in circulation are not up for sale. This wave of new demand from large capital allocators will have to fit through a pinhole of available supply, which will result in skyrocketing Bitcoin price as Bitcoin undergoes the transition from a predominantly individual/retail-driven asset into a global monetary asset with geopolitical implications. A $200,000 Bitcoin would equate to about a $3.7 trillion asset. Still just a fraction of the current market value of gold, its closest monetary competitor. While nothing in this world is a guarantee, it is quite a good bet to place that politicians and central bankers will continue to operate following their basic incentive of printing money, as well as there being an extremely strong probability that the Bitcoin network will continue to attract additional adopters, as more rational individuals around the world come to realize that a system of rules is preferable to a system of rulers. Thus, with all of these factors at play, $200,000 Bitcoin is not only in the cards, but it is highly likely, which is not something you'd expect to hear from something like Bitcoin or any other cryptocurrency for that matter. But another factor into this is that many are trying to make it easier to buy Bitcoin via their platforms. Morgan Stanley. Morgan Stanley's wealth management clients may soon have even more options for getting into Bitcoin. New York digital investment group NYDIG, a financial services firm dedicated to Bitcoin, and FS Investments have filed paperwork with the U.S. Securities and Exchange Commission, the SEC, for a pooled investment fund aimed at clients of U.S. megabank Morgan Stanley. According to the SEC filing, Morgan Stanley will receive certain placement and servicing fees with respect to clients it refers to the issuer. The FS NYDIG Institutional Bitcoin Fund LP would be the fourth Morgan Stanley linked fund that provides institutional clients' portfolios some exposure to cryptocurrency, and the second from NYDIG and FS Investments. Morgan Stanley first offered Bitcoin funds in March, including the FS NYDIG Select Fund, the Galaxy Bitcoin Fund LP, and the Galaxy Institutional Bitcoin Fund LP. It was the first major U.S. bank to do so, though the funds have high barriers to entry, with the minimum investment for the former two set at $25,000. It's $5 million to buy into the Galaxy Institutional Bitcoin Fund LP. As evidenced by its tagline, NYDIG has been even more active on the crypto front. In May, it partnered with Fidelity National Information Services, FIS, to announce a way for ordinary bank customers to buy Bitcoin within their accounts. What we're doing is making it simple for everyday Americans and corporations to be able to buy Bitcoin through their existing bank relationships. Patrick Sells, head of bank solutions at NYDIG, told CNBC at the time. The future of Bitcoin. So, what is the future of Bitcoin? That sadly is something that can't be answered by anyone, because anyone who saw Bitcoin arrive a decade ago would have said it wouldn't have lasted a year. And yet it has, and has made a lot of people rich. Those who say now that it'll boom may be right, but they also know all too well that this cryptocurrency is prone to have rises and falls. So until it becomes a consistent thing, something that can't be guaranteed, you'll just have to wait and find out what happens next. So, what do you think? What do you think of this look at the charts and projections that indicate that Bitcoin will indeed go and be worth over $200,000 if things progress as they potentially can? Do you think it'll be able to reach that level and beyond? Or do you think it's so volatile that it'll plummet far down before that can happen? Are you currently invested in Bitcoin? Let us know in the comments below, and we'll see you next time.